Welcome back, everyone. Thanks for watching another one of my videos. I want to talk today about how you can go from renting to being rich. Now, it's not overnight, but it is a process. A lot of people, when they want to stop renting and buy their own place, they'll look for a home that they feel like they want to live in, the perfect house for themselves. But they're just looking for a place to live, and they're not really thinking about it as an investment. So what I think first-time home buyers need to do is think about buying a place that could springboard them, or spring you, if you're a first-time home buyer, into building wealth. So, unfortunately, unless you happen to purchase a home in an area that's just about to go up significantly in value, you're likely not going to be building a lot of wealth just by buying a single-family residence to live in. You're going to have to do something differently, and likely not live in a house that's your perfect dream house either, especially not for your first house. So for first-time home buyers, quite often you're not making a ton of money, and you have maybe you're starting a family and you have other expenses. So what I'm going to recommend to you is not buy a single-family residence, your perfect house in the perfect neighborhood for your first home. What you should really look at doing is, since you're renting right now, and you might be renting in a condo or an apartment complex, you're already used to neighbors. I would seriously consider buying a multifamily building, let's say a 3 or 4 family building, as your first home. And you're going to rent out the other units, and you're going to live in one. And while you're doing this, you're going to find, when you do the math, I could give you examples here on the screen, but every area is different and the purchase prices will be different. But bottom line is you're likely going to pay less for your mortgage after you've collected the rents from the other tenants each month than you will compared to the rent you're paying now. Okay, so that's what I guarantee you will be the case. And the other thing is that your tenants are going to essentially pay down the mortgage for you. Okay, you're going to be spending less each month out of your pocket than you are now with a multifamily building. You're going to live in the same essential conditions, except these are your rules because you're the landlord, and you're going to start building wealth. So let's look at this for an example. Let's say a 4-family building in your area is $500,000, and you're thinking, Eric, where am I going to come up with that kind of money? Well, let's look at an FHA loan, for example. You can get an FHA loan for a multifamily building with 3.5% down. Okay, 3.5% into $500,000 is what, $20,000, a little less. Am I doing the math right? 5 times 3 is 15,000. Yeah, just under $20,000. So, okay, $20,000 gets you into a multifamily building as an owner. Just think about that. And your tenants are going to be paying rent each month to help pay this down for you. So you're going to get a decent rate. You are going to have mortgage insurance, but it needs to be occupied as your primary residence. That's the rule when it comes to FHA. So for the next 2 years, you're going to live there. And then what you're going to do is you're going to go find another one. And during that 2-year time, you're going to save money for your next down payment on the next one. Okay? So then you're going to go find another building, and you're going to put another, for example, $20,000 down payment on the next one. If you don't have that money, you can get a gift from a relative. I've got articles and videos on that, and you can put your down payment on the next building. If you still can't get that down payment and your current building has appreciated in value, then you can do a cash out refinance, cash out the additional funds you need, use it as a down payment for the next one. So now you're going to move. Yeah, 2 years later, you're going to move. It's a pain. So what? You want to be rich, or you want to keep renting? That's what I thought. Okay. So you're going to get another down payment. You're going to move. 2 years later, you're going to move to the new building. That'll be your new primary residence. You can take out another FHA loan if you're making that your primary. Okay. And then you're going to rent the unit that you just left. So now that one's fully rented. Now you've got another one. You're going to keep doing this until you feel like you've got enough. But 6 to 8 years into this, now you've got 4 family buildings. Who else at that age has that kind of real estate in their portfolio? Probably nobody. Okay, so this is the strategy that I have for first-time home buyers. How to get rich. I can tell you that I wish I did it. I did the stupid thing, which was, try to go look for the perfect neighborhood, the perfect house, lived there for 8 years, sold the house, and it barely appreciated in value. It really did nothing for me from an investment standpoint. That's as an investment view. Now, sure, it may allow you to live in the place you really want, but you've got your whole life ahead of you. Your life isn't the next couple of years. Your life is down the road. Okay, so I would seriously consider that. Now, let's say you want to go bigger than 4 family. Well, now you're not looking at an FHA loan or residential loan. Anything over 4 units is now commercial. 5 units or more, you're at commercial. There is a benefit to that and a negative. The first the negative, which is you're likely going to have to come up with a 25% down payment. That's the tough part. If you have it, now here come the benefits. The benefits are that the value of a commercial building is not going to be determined based upon the values of the neighborhood, of the other buildings in the area. So the real estate market can decline while the value of your building can increase. And that's because for commercial, it's all a math equation. It's a cash flow equation. So the higher you raise the rents and the more you reduce the expenses, you've added value to the building. The building's now worth more. There are too many examples of people buying small apartment buildings that were not run well, not optimized, old heating systems, for example, leaking windows, rents haven't been raised in a while. The units are falling apart, not upgraded, and you start putting a little money in it to upgrade. Now you're raising the rents a couple $100 for the next tenants that move in. For each dollar you add to the building in efficiency or savings or increased rent, you're increasing the overall value of the building by that much. So again, that's a bigger leap going from a residential 4-family building with an FHA loan with just 3.5% down up to a commercial property where you're going to need 25%. But like I said, if you can optimize the commercial building then and live in it at the same time, then you're really going to make some money and fast. So I hope that this gives you a couple of good ideas as to how, as a first-time home buyer, you could really rethink your outlook and what you want to do with the next few years of your life. And just think about not jumping from being a renter to the perfect house, but going from a renter to being a landlord, going from a renter to being rich eventually. And the only way you're going to do that is if you essentially start looking into multifamily units. And that FHA program does offer you the ability to get into one with a relatively small down payment. So I hope this has given you some ideas. If you have any questions, just leave them down in the comments below. You can visit the website or any one of the other videos that'll give you more insights as to how you can finance one of these properties. So thanks again for watching, and I'll talk to you soon.